L&T Finance reported stable set of earnings with its net profit coming in at 591 crores versus about 580 crores on a YOY basis. The company has been on a fundraising spree mainly to change its funding basket. So the management is here with us to talk to us about how the quarter went by and also what impact did it see on the margins front and also on the funding profile because of all these activities undertaken. Mr. Dubhashi, so could you walk us through the main highlights of the quarter? How did it pan out for you this time around?
Surely. This quarter's results, I will just try and put it in perspective. The most important perspective is that this quarter is another step in our ability to deliver assurance, in our ability, in our quest of delivering a steady performance, however turbulent the times may be. In good times, obviously, the performance will be steady and good, but even the turbulent times, which have been there for the last 5 quarters at least, we have always delivered a steady performance in terms of margins, market share, credit cost, GNPAs, portfolio quality, and obviously top quartile ROE. So this quarter to be seen as another step or another proof of our ability to deliver that. So that is number one. Number two, very important one, is this quarter has further accentuated the trend, not only for us, but for all our peers, quality peers, is that out of the difficulties among the NBFC sector, very clearly distinguishing has been done for top-rated NBFCs belonging to good parents, of good parentage. And that trend has been seen for the last couple of quarters, but last quarter that was a very accentuated trend, and we raised our almost highest ever quarterly funds raised around close to 10,500 crores. The important thing is these are all long terms. They have reduced our CP borrowing from 16% to 9%. Even if the ALM can take more, but at this point of time, it is better to be safe. More importantly, these long-term funds are from a diverse sources. They are from private placement of NCD, public NCDs, ECBs, PSL loans, bank borrowings. So all sources they have been raised. And last but not the least, while moving so substantially to long-term funds, the cost of funds has actually come down sequentially from 8.61 to 8.54. So that's the second message that is very, very important in this quarter's result. The third message, which is very important in terms of disbursement growth, is across industries we have followed our strategy of either following the market, improving our competitive position, or maintaining the competitive position, or improving it market by market. We don't look for aggressive growth when the market is going down, because that will be toxic. That growth will be toxic. But the growth has kept in pace or even bettered the market in industries where we want to grow, industries where we want to moderate, like real estate. We have been able to further improve the quality of disbursement, going to bigger and better developers. So across the disbursements that we have done have been in keeping with that strategy of doing better than the market when the market is not doing so well. And last but not the least, the disbursement degrowth that you see is not because no longer because of any fund availability or anything like that. It is a part of market growth or of our strategy. We can now confidently state that any amount of funds that will be available required for our growth is now available and not only available but available at the right cost. So these three would be the big messages of this quarter results.
Okay, so when I look at the breakup of your disbursements, in the infra book is obviously down and the housing finance book is also down by about 14% on a YOY basis, but stable on a sequential basis. So one key positive that I see is that in the rural financing book, your disbursements on a sequential basis are up by almost good 800 crores. It's down YOY basis, but it's up on a sequential basis. So are you seeing any signs of green shoots appearing in the rural economy and to the areas that you cater to?
Definitely, but first I would like to clarify something. In rural, sequential from Q3 to Q2 should never be measured, because in India, rural really picks up in Q3. So it will always be very smart growth from Q2 to Q3. So I don't want to claim credit there, because Q4 will be lower than Q3. I can tell you today. That's the seasonality of the Indian rural market. So that's important. What is to be seen is the various segments within this, and also YOY growth. So very clearly tractors saw a very good growth in the market itself. The growth is still not positive over last year, but the degrowth in the market was way lower. We saw very good market pickup during the festive season. We took full advantage of that, and we actually showed our best ever disbursements in tractors. We clearly see green shoots there. Good Kharif crop, signs of excellent Rabi crop, very good reservoir levels. I mean, the reservoir levels are some 27% or so higher than long-term averages. So very clearly there will be recovery. We believe that next year will be positive growth for tractor market, and we have built now formidable strengths in terms of network, in terms of digital data analytics for taking increasing our market share next year. So that's what the tractor market speaks about. Two-wheeler is another story. We are making the transition, the market is making transition from BS4 to BS6 on 1st of April, and right now the market is a little bit in that confusion that whether BS4 should be pushed, BS6 should be pushed, and we believe that the negative growth in two-wheeler market will continue for a couple of quarters more. Microloans, of course, the demand will always be there. It is a matter of our own strategy, our own data analytics as to where all we should grow. So we are growing less in the eastern and southern parts of the country, and we are opening up new areas in the northern part of the country. And the overall growth will be just a function of this. We don't go for thinking I want to grow so much and then put targets for states. It is always bottom up. We do deep data analytics and see where we should grow how much, and then the growth comes. So that explains rural. As you rightly said, real estate we are very circumspect, but within housing, salaried housing has grown by mid 20%. So very well it is doing. Infra will always be lumpy. I mean, one big disbursement not happening last quarter, happening in fourth quarter will push up disbursement growth. So we need not read any trends in infra.
Okay, so I want to dwell a bit more about infra book, because rural book you've already elaborated. On the infrastructure side, government has been taking a couple of measures. One was with regards to the arbitration claims settling down and the companies being repaid. So are you seeing any signs of revival happening there? And I see that you're also into power transmission, and a lot of focus and a lot of talks are there that ahead of the budget there are a lot of expectations going up that perhaps a lot will be done on the power sector side. We've already seen some steps being taken by the government in last couple of months, be it the letter of credit mechanism and and the Uday scheme being revamped. So what are your inputs, or what are your observations on ground, and what is it that you would like to see in the upcoming budget on the infra side?
Definitely. I think there is no question that the government has taken a lot of measures, has made very far-reaching or other very over the next 3 to 4 years, 5 years, what is going to be the investment pattern. It has met the national infrastructure path. It's quite positive for the overall infrastructure sector. The government policies, there is no doubt about that. Sector by sector, good things are happening. Private sector investment should increase, and with that our scope should increase. We are doing two things. Okay, we can't only depend on the government, so we remain very focused on our focus sectors of renewables, operating roads, and distribution, the power distribution, transmission, not distribution, transmission, and we believe that excellent scope of growth is there. Even in the short term, in Q4 itself, we have an excellent disbursement pipeline, and we believe that good growth will be seen in the infra book in Q4 itself. We are also doing something else. We are looking at new areas, like something like city gas distribution is a very interesting area. It is infra also, and at the same time retail also. That you support a city gas distributor who gets a license for a particular area. Like in Mumbai there is Mahanagar Gas, or in Delhi there is Indraprastha Gas. Like that, various areas in the country are going for piped natural gas, and also the auto fuel gas, compressed natural gas, and that is an 8-year monopoly is given to a particular player with a license, and we believe that it's a great area to lend, very safe, as the pay-in comes in a escrow from retail players, and we can have access to that escrow. So various new areas of infra are also coming up. So our strength in infra, our strength in understanding new models, studying them and taking leadership in them, we are very, very positive on the infrastructure lending opportunities in our core areas as we go ahead.
So that's quite interesting. Just one last question. Your provisioning in the quarter has gone up by about 73% on a YOY basis to 590 crores. And I see from a brokerage note that the macro-prudential provisions are to the tune of 350 crores. So what is it that you anticipate in terms of asset quality going ahead? And in this quarter itself, did you see any pain coming by?
Okay, so asset quality is actually quite steady. In fact, improved from last year, improved from last quarter in terms of net stage 3. Provision coverage has gone up. So asset quality is very steady. As you rightly said, the credit cost has gone up over last year. There are two major reasons. One, Assam in microloans. Assam is an area where we are seeing some disturbances. In fact, we saw it very early, about 9 months back we saw it. The disturbances started being talked about only in last quarter, but we saw it last 9 months back. As an example, in Q1 of or Q4 of Q4 of last year, our monthly disbursement in Assam was more than 200 crores, and in quarterly disbursement in Assam was about 200 crores, whereas our quarterly disbursements has come to some 15-16 crores this quarter, and every quarter it has reduced from 200 to 160 to 80 to 18. So we had our early warning signal has shown it, and our portfolio in Assam is quite in control. But we have prudentially, like we had taken in Orissa a year back, prudentially taken close to 100 crore provision in Assam, out of which close to 70 crores is standard asset provision. They are not NPAs. We have taken standard asset provision just to be ready if any problem happens in Assam. So that's one of the major explanation of the increase in credit cost. In a way, it is macro-prudential, because those are not NPAs, those are standard assets, and we have already taken provisions like we always do. We never like to give shocks. This is where the steadiness comes from, that when we see early signs, we just take provision. That headache is over. Now we will concentrate on recovery.
All right, Mr. Dubhashi, thank you so much for joining us, and all the best for the quarters to come, sir.